Great. So welcome you all to the question solving stage of IAS7, Statement of Cash Flow. IAS7, and what we call it Statement of Cash Flows. Take note that you call it cash flows. So anywhere you're writing, make sure you write cash flows, not cash flow. Not cash flow like this. Agreed. It's a cash that flows. You're looking for the cash that flows in and out. So there are two directions. Good. Now, first of all, you must know the reason why we are learning this. I'll give you a summary of it. Then I'll go straight with my question just for 2 minutes for you to get in and out of it. Basically, this standard started, we call it fund flow statement. That was the very first name we gave it, fund flow. In fact, they change it and then they call it cash flow statement. Now they say we should call it statement of what? Cash flow. Have you seen? So now the main reason for this standard is this. You know, basically, profit is not equal to cash. Profit is not what? Equal to cash. Due to the accounting model that we use, the accrual basis. You can sell item, your profit could contain a lot of credits. Sales. So your profit will not necessarily be equal to what? Cash. So to explain ourselves, to explain the difference, to reconcile this, to bring the profit and cash to an agreement, we need a statement that will help us. And that statement is called what? Cash flow statement. Simple as that, or statement of cash flow. So statement of cash flow is a statement that we prepare to reconcile the difference between what? Profit and cash. So anytime profit and cash are not going to be the same, and it's not be the same because of the accounting model that we use. The accounting model that we use will always create a difference between profit and cash. And to reconcile them, we need what? Statement of cash flow. Agreed. So the reason, and they will ask you, purpose of cash flow statement. Tell the examiner to reconcile the difference between profit and cash. And what? Cash. You are done. So to just get a different, to reconcile, make sure that all of them are what? The same, at the same point. Just prepare cash flow statement. You are done. How we get it? Then how do you prepare it? How do you prepare it? Then we now match all cash. Cash that flows in and cash that flows out. So normally we can go further and say that, oh, we prepare it by matching all cash inflows against cash outflows. So here it's about what? Cash. By matching cash inflows. Against what? Outflows. So normally called cash movements in and out of the organization. I am done. Now, let me just give you the concept behind cash flow. That I've given you the very first concept. That the concept or the reason for preparation of cash flow, it's in fact centered on what? The underlying difference between profit and cash. If there's no difference between profit and cash, then there's no need for cash flow statement. I repeat. If profit and cash are the same, do you need to reconcile them? No need, because they are the same. Where there are differences, for instance, if an accountant of an NGO or a bank, or let's say a church, or any, in fact, not-for-profit organization, and you've declared a profit of, let's say, 500,000 cedis, and your CEO now asks you, what's the cash balance? Third owner, boss, the cash balance is negative 200. So what? What? Are you kidding or you are serious? What are you trying to tell me? And then this one reminded me, MTN, their first more money advert. Who remember? MTN first more money advert. Nasikano way. That small boy who has a tip corner of the boat asking for the money. That's why the boss will ask you, where's the money? And they'll start be calling accountant all sorts of names. The adding zero, subtracting zero, buying V8 without reaching their capacity. No, it's not like that. Mr. Accountant, when something happens to you, don't cry, don't do anything. Just go back, prepare cash flow, and present to the owner. Simple as that. So that is all. But if you use what you call cash basis, take note. If you use cash basis, your cash and profit are the same, no difference. So in that case, there's no need for you to prepare cash flow. But because we don't use cash basis to prepare the account, we'll use what? Accrual. So definitely there will be difference between profit and cash. Agreed. Powerful. Now, what caused the difference? So that's what I want you to know for me. Causes of the difference. Now, number one, number two, and then number three, causes of the difference. Very first thing that all of us are aware of is because of accrual basis. Accrual basis is because of that. That is the main cause. Any other cost I will explain, it's embedded in this. Accrual, meaning that you have not received cash, but you've recorded a transaction. Profit has been affected. Meaning that you have not paid for that expense. You've recorded it. Profit has gone down. Cash has not been affected. I will get it. Accrual. Number two, it is caused by what you call non-cash items. Non-cash items. So these are the items I want to just know. Non-cash items. Number three. In fact, non-cash items. What example? All provisions. Wow. All provisions. Give me examples of provision. In fact, depreciation is a provision. Impairment is a provision. Amortization is a provision. Bad debt. All of them. So all the non-cash items. It will cause a difference between profit and cash. The last one is called capital expenditure. Capital expenditure or repayment. Repayment of what? Loan. Let me give a typical example. If we bought assets, we use all our money the whole year, everything, in fact, all the sales we made, we have used the money to go and buy what? A plant and machinery. Will it reflect in the P&L? With the plant, the cost of the plant, are you going to record in the P&L? No. So the profit will never be affected. What happened to your cash? Your cash will go down because you use cash to acquire that plant. And as a result of that, your profit will be more than your cash because you use all the money to go and buy what? Assets, plants. So that's why it's costing that. Repayment of loan. If you get huge money and you repay all the loan, won't your cash come down? Definitely go down. What happens to your profit? Nothing, because if you pay loan, it's never an operating activity. It's never, in fact, it's never an operating expense. So it will never be reflected in the profit and loss.
Capital expenditure. What do you call that?
In fact, capital expenditure is an asset. It's just the expenditure incurred to acquire a new asset or to improve existing assets. So spending on assets to improve it or to get a new one. Simple as that. So imagine buying a new engine, capital expenditure. I'm done with this. That's all. So now I'm going to pick my first example. I'm assuming that you have gone through the format and you've gone through the videos that as we have discussed, so that when I'm solving the question, I can solve it on what? A clean mind. These are the issues I want you to just take note of. Even though it was explained in the video, they are very important and they are the one I'm going to deal with. And I believe the format for indirect method, you're okay with it. For those who went through the video, the indirect method is fine. So if it's fine, then let me now switch quickly to that of the question and scan through the questions. So the questions, I'll solve one now. Very comprehensive one. I'll solve that one now. When I'm done, then I'll now scan through some few questions with you, and then we move on. The question I want to solve with you is called Ofolusua 2011 November ICA past question. Question number, in fact, Ofolusua, this is your question number 3. There are only 3 questions which is available for your question 3 slots. To make sure that when those 3 questions come out, you solve them with all, in fact, with everything. Yes, with everything. Only 3 questions that you must. So all your questions, your question 1, your question 2, your question 3, your question 4, your question 5, your question 5. You don't have question 6, and then it's your question 6. But the bank, they have question 6, they even have question 7. Now, for those questions, I'll give you 3, 3, 3, 3. Last time I was giving like 7, 7, 7, 7, 7, then select 1. But this time I know that the time is very short, very limited. There's no difference to be room. Everything. So I'll prepare 3, 3, 3, 3, 3. So question 1, only 3 questions. Question 2, only 3. Aside what you are doing in class. So that is the section. Okay, so let me pick my questions. Where are you? But they're not coming in. FR. Okay, so that is that. I think they are in here. Okay, so let me open the material. I'm sure I will see Ofolusua in one of the material. But for the one I sent on the page, it's in. I think it's in the last sittings intervention. But that question is supposed to drop last sitting. But we'll not give up on that question. We won't give up at all on that question. They will do it for us. Okay, so I think it's in now. So let me select my question and let's go. Ofolusua, if you have the past question, you can open with us. If I see it in here, I'll do justice to it. All these questions, I think the first 4 questions has been solved. I receive. Okay. More limited. This is the old IC. This is a past question called Mucha. And then we brought it called Mo. So let's take note. Let me go straight to the game. This one is wax. I just have to solve one complete one with you. And then after the rest, we'll do as if we are solving or not solving. And go to the footnotes. Okay, so more I receive. Okay, so let's go again. This thing. FR intervention. What does it say? Okay, so I'll pick it from the past question, but check. It's in your the list I gave you. So Oforisua Limited. Let's go. Okay, so let's go straight to the game. I think it's in 2011. Let's all go there. Why am I solving old question with you? It's for a reason. Then I'll scan through the recent ones. November 2011. Let's go there. Okay. Yes, this is a question. Obviously. Wanted to dodge me small. Okay, so let's continue the game. Okay, so I've seen the question. The first one is in. The first one is in. It's November 2011. I see question number 2. That is what I am solving today. Those with the past question you don't have, but your past question start from 2012. You don't have. Yes, it's true. It's true. I just remembered. It's true. You don't have. Okay, let's go straight to the requirements. As usual, rat or rough. This one will be rough because it's a financial statement. So take note. Don't forget our approach. Something big will happen on 6th of March. Something big will happen. So we have something called, but I don't know, I don't need to pre-shoot it. It will come. Now let's follow the rough principle. This will become a rough. Requirement, additional information, financial statement. If it will be a trial balance, become rat. Agreed. Powerful. So let's go. Now my team are in position. Prepare. Prepare. In fact, let me mention it again. Prepare a statement of cash flows. Have you started wrote it? Like I told you, that is what? Cash flows, not cash flow. Agreed. The statement of cash flows for Oforisua for the year 2, the 3rd December 2010, in accordance with IAS 7 statement of cash flow to explain the situation to a warrant director. B, comment on the cash flow management of Oforisua as reviewed by the statement of cash flow and information provided by the above. Now let me explain this. Last sitting, the examiner did something funny. Corporate reporting examiner, level 3, they were looking for ratios to calculate. There were no ratios. They gave them cash flow statement for them to explain, analyze the company's financial statement using cash flow. Simple as that. And this is what the examiner wanted to do here. Just wanted to know, comment on the management of cash flow. So you can use cash flow to assess performance of what company. How do you do that? I only give you 3 points. There are only 3 points. 1, 2, 3. We are done. Aside that 3 points, nothing else again. Let's go. So now we know the requirement. So right after the requirement, go to your solution board. Go to your solution board. Let's go to our solution board. Now this is right after every requirement, at least I'll do something to add some text. In next time, it will be your question number cash flow. It's your question 3. This is going to be your question 3. So my question 3 here. Oh yes, please. This is your what? Your question number what? 3. Cash flow question 3. Check it first before you check any other question. Now let's go. The name of the company should come first. That is Offersual Limited. Here is A like this. So write Offersual Limited. And align it and start statements of cash and flows. As they wrote it, do the same thing.
So supposing the word cash flow, right? Cash flow.
Well, if you copy the same thing for us, one of my, because the mistakes come from the examiner, not the student. Okay. So for the year 2, the examiner said for the year 2. So it's for the year. Either you can write ended, but here they say for the year 2, 31st of December, 2020 what? Oh, this is not 2020 question, no. 2011, they've not reached that this year, so I'm not sure. 2010, yes. So they use 2010. Let me also make 2010. Your 2 reporting currency, go and check whether they freight 3 zeros. Check whether they freight 3 zeros. Check and be sure that they freight 3 zeros. Yes, they freight 3 zeros. See, I can see 3 zeros. They raise it. Oh, they raise another 3 zeros. So thank God. I must also raise what? 3 zeros. So I'll start like this. Ghana city like this. As they've written it, comma, 3 zeros. Comma, 3 zeros. That's all. So right after reading the requirement, please start the work. So one tick for you, free of charge. Another tick free of charge. All these 2, they are 1. The 2 shall be 1. So another tick for you. Make it what? 3 free ticks.
Is it 1.5 or 3?
In fact, a value of a tick, I'll not tell you. If I tell you, you not do it. In fact, it ranges from 0.2 up to, in fact, maximum highest apex. That one we are dashing max is 0.4. Highest we can go. Highest apex. In fact, but we go 0.25. Your own is 0.25. So imagine 0.25 times 3. What's the max? Times 3. It's not even up to 1. No. Yes, 0.75. See, if I'm not getting 49 before, you don't know what 0.75 can do. If run it to get 1, right? Plus 49. Won't it change from 49 to 50? We come back and come and right? Not at all. So 0.75, in fact, can change the story. Can change the narrative. Yes. So that's so do this one first. And then as usual, we are done with the requirements. So let's go to the additional information. Additional information for cash flow. So let's go. The additional information normally start from the top. So let's start from here. The following financial statement relates to 2010 financial year together with comparable figures for 2009 were submitted by the Chief Financial Officer of Offersual Limited to the Audit Committee for preliminary, in fact, discussion before submission to the Board of Directors for approval. Okay. So now if you go and it asks you, go to the interview and ask you that after a pair of financial statement, who do you send it to? Tell them that you send it to the audit committee for what? Discussion before the board will approve the financial statement. Let's go. Footnote is here. Additional information available. An item of plant with a current amount of 480,000 was sold at a loss of 180,000 during the year. This loss is included in administrative expenses. So here, note 1, you write something small against it. Anytime they say sale, so let me summarize it here for you. Where should I even do it? Let me do it far page. Summary. Note 1, anytime there's disposal, please take note of this. When there's disposal, always there must be disposal. In fact, on a Monday, 4th of April, by this time, you have gone through it already. So you see it. When the time there's disposal, 3 things. The examiner should give you 2 so that you find a 3rd one. Disposal per IS 16. To calculate the profit or loss, we need what? The proceeds, how much we sold the asset for, the current amount of the asset, and the profit or loss. Simple as that. These 3, no examiner will give you all at a time. I repeat, no examiner. But you need all these 3. So the proceeds, how do you get the proceeds? So let's check this question. Which one have they given it to you? Which one is not in? An item of plant with a current amount, the final current amount, good news, was sold at a loss of 180. The proceeds is missing. How much they sell the asset for? It was not told. So therefore, let's go. So proceed, we don't know, but we know the current amount to be 480. We know that there was a loss of 180. So what should be here? That's all. What should I subtract from this? So that, in fact, there's a certain figure that if I subtract 480 from it, I'll get negative 180. What's that figure? Simple. So therefore, this figure is 300. And all these 3 have a special place to be recorded in cash flow. They are very important. The proceeds here, the 300 goes to investing activity because money is coming in as inflow. Current amount, we need to calculate the PPE schedule, acquisition of PPE. The profit goes to operating activity for reversal. That's all. And then always you must give you 2 at a time. So take note of this, 2 at a time. 2 at a time. We'll never give you all the 3. Sometimes we'll not give you the current amount. You find the current amount. Sometimes we'll not give you the profit or loss. So I'm done with the notes. 1, agreed. Proceed goes to investing activity as inflow because we have sold what? A PPE. We sold assets. And it's an investing activity. I hope, friends online, if I've not gone through the video, let us know so that I find an alternative way of satisfying you. In fact, like giving you a shortcut method. I'm listening. Yes. Now let's go. So I'm going back to the notes. So I'm now note 1. Note 2. Depreciation of 560,000 was charged to cost of sales for PPE in a year ended 31st December 2010. Also, is it the fair value model in investment property? There were no purchase or sale of investment property during the year. So here they are just trying to tell us that depreciation is a non-cash item, so you reverse it under what? Operating activity. Powerful. Now, investment property. Yes, if not, I think tweeted it, right? It's what I skipped after IS 16. Yes, instead of the 40. So what I'll do is I'll pass it the notes as usual. I'll pass it nicely. I'll pass the video as usual, the pills. And then yes, then you go through. But the items are many. I have to do some critical ones. Okay, so investment property, fair value. If there's any changes in the fair value, if recorded in the P&L, we must reverse that. That's all we're trying to tell you. One is the fair value model. Any changes has been capitalized in the P&L. So therefore, reverse it. And you can prove that. A good question you can prove. Let's see if we can prove this. Go to the face. What did you see here? Investment property, right? What's the opening balance? 800. What's the closing balance? In fact, opening balance is what? 800. Closing balance is what? 840. So has it increased or decreased? That's increased, right? So this increment is as a result of what? Fair value gain. So there's a fair value gain of what? 40. And that 40, a good examiner, it must appear in a P&L. This is the 40 you see here. Have you seen the 40? That's the 40. And this 40 needs to be reversed because it's non-cash item. Powerful one. This 40, this 40. Okay, so we are down that note. Note 3. Loan notes were redeemed earlier than agreed in a loan agreement, thus incurring a penalty payment of 40,000, which has been charged as part of what? Administration expenses in the income statement. Oh, now you are taking a loan from a bank and you pay early. In fact, you pay before the deadline. They've charged you interest. Why? Why is it like that? No, if you pay late, you also charge interest. They want it on time. You know why? If you pay it early, that means some of the interest have to be forfeited. So therefore, you have to pay the compensation. In fact, it's a finance cost. So look for that figure. Penalty of 40. So this 40,000 is a finance cost. Why? Because in connection with what? Loans. And per the video that you went through, we said that financial activity is made up of 2 items. What are they? Financial activity made up of only 2 items. What are they? Two items. Who can tell us? If I'm looking for financial activity, only 2 items I must consider. What are they? Number 1. Number 2. Financial activity, what goes in there? But I must summarize that. Equity and liabilities. Equity and debt. So finance is about equity and what? Non-current liability. So anything that has to do with what? Non-current liability goes to where? Financing activity. Agreed. That is all. Investing is about assets. Operating activity is about profits. Have you seen the 3? So that is that.
Operating is about profits.
Yes, so good. Let me do it here. Let me summarize it. Again, let's take note of this. When you talk about operating activities, it's about your core purpose. Examples: sales, cash paid to suppliers. So it's about your profit. Now I will pick profit items and core activities. Now, when you go to investing activities all about non-current assets, simple as that. Non-current assets and investments. Non-current assets and what? Investments. It can also be short-term investments. So non-current assets, BP, intangible assets, investment property, all of them are what? Non-current assets. And investment. Investment could be what? Short-term or long-term. Agreed. All of them. Let's go to financing. Financial activity is all about equity and debt. Simple as that. Equity and what? Non-current liability. So anything that has to do with your equity and non-current liability goes to financing. Now, if I should go further, we use the P&L. This is coming from P&L. And this is coming from the balance sheet, financial position, and this financial position. So have you seen that? So that's why we use P&L and financial position to prepare. Great. So that's all. We are done. Let me go back. So now back to my question. The loan notes were redeemed earlier than agreed in a loan agreement, and that's incurring penalty of 40,000, which has been charged as part of what? Administration expenses. Is it true? Is it right? This expense, this penalty is in connection with what? Loan. And loan is a debt. And debt, anything, in fact, any expenses, any issue that comes with debt, where do we send it to? Financing. But they have added to admin. They added to admin means they've added to what? Operating activity. So what do? Take it from operating, reverse it in operating activity, and send it to what? Its rightful place. Where? Financing activity. In fact, if you omit this note, it will also balance. In fact, the note name, even if you omit one, it will balance. If you do just one note, it will balance. If you don't touch anything here, it will also balance. So that's why not every balancing that we want to know. Balancing is the one who balance with the right balancing figure. Not every balancing. Good. Note 4. So over here, I must reverse 40,000 in operating activity and send it to financing. Note 4. There was an issue of new shares for cash on July 2010. On 15th December, some shares in the treasury were also issued for cash consideration. There were no bonus issues of shares during the year. In fact, they make it so straightforward. There's no bonus issue. So that means the difference in the share go to the equity. Shareholders fund has started 1,002 and then it's 3,000, right? So that's increased by 1,008. They are just trying to tell you that all of them were as a result of what? Cash. They issue shares for cash. That's all. Now, if I want to comment your life well, I'll just tell you that, oh, they also issue shares for bonus of what? 600. So that means not all the 1,008 were in the form of what? Cash. So can you take off the bonus and know the real amount that came in as what? Cash. Because we are dealing with what? Cash flow. So all the non-cash items need to be reversed. How we get it? Powerful. Yes.
You have to prepare the equity before you can do it.
Change the equity. No. That one, we only prepare to confirm. Confirm something. We prepare to confirm something. Yes. We prepare to confirm whether dividend has been paid or not. Okay, so we are now note 4. Note 5, let's go. Offer gives 12 months warranty on some of product it sells. The amount shown in the current liabilities warranty provision are an accurate assessment based on what? Past experience of the amount of claims likely to be made in respect of the warranties outstanding at each year end. Warranty costs are included in where? Cost of sales. Now let me tell you, here it's using just warranty. Any provision at all, it can be provision for environmental decontamination, provision for, in fact, anything at all, any provision. Warranty is also a provision. IAS 37. Please treat it the same. Just go and find, go to the current liability. Warranty provision is here. What's the opening balance? 200. What's the closing balance? 400. It has increased, right? Just find the increments and go and reverse it. That means during the year, they have added additional provision of 200 Ghana cedi to the existing one before arriving at what? The 400. So that additional and the different, the movement, go and reverse it. They have rather reduced the profit by that amount because an expense to them. It has been subtracted. So what do? You go and add back to the profit because, and here, please, any provision at all, here, does not just use warranty. I could just change the name to environmental provision, still the same treatment. I could change the name to which provision again? Provision for dismantle cost, the same treatment. I could change the name again, which one again should I even mention? Any provision at all, it doesn't matter. Agreed. Powerful. Now let's go. So now we are done.
Additionals, don't have-
So the treatment is this. Find the difference between the open balance and closing balance and go and reverse it in the P&L. The operating activities, go and reverse it there. So when you go, it's part of the adjustment. So when you're adjusting the profit. If there's some figures in the footnote, no, this one no figures. Yes, no figures again. Okay, so let's go. No 6. The only movement in the retained earnings during the year were the retained profit and dividend payment. So this examiner is very good though. Wow. This examiner is very good. Extremely good. You know why? In the modern era, modern examination question setting technique, we don't say this again. So yeah, this note, we could have just deleted it from the question. Now, dividend, you must always confirm and test whether dividend has been paid. So if you see a question where they will not give you the dividend figure, if you check to the question, no dividend. Check that there's no dividend anywhere. You have to confirm whether they pay dividend or not. How do you confirm? Prepare the retained earnings account or the changes in equity. Only the income surplus section. And then that is so. I'll do that one for you. Because here we have to do it. So we have to look for the dividend. This examiner is good to the extent that I haven't give you a signal that you have to look for the dividend. Simple as that. So in a typical recent exam question, this note should have been what deleted from there. So that you have to know that, oh, by implication, I must look for dividend. Simple as that. If it's not in the question, I must look for it. If I say I can't find it, then I continue my journey. How do you find it? We'll look for it. For this question, I'm going to look for it. So how we are going to find it in this question, the same way we have to do for all the questions. Unless they have given you what dividend in the question already. Don't worry yourself, it's already. Last one. The stated capital represents the value of ordinary shares issued at 0.6 per share. That's all. Now, let's go and then listen to the crazy session. During the plenary discussion of the financial statement, one of the directors expressed dissatisfaction with the cash position. He did not understand, I repeat, he did not understand why, in spite of a profit of 560,000, the cash position should worsen from a positive balance of 100,000 in December 2009 to a deficit of what? 420. He suspects embezzlement on the part of what? Chief Financial Officer. I told you that you have declared a profit of 560. Your cash balance is negative 420. Who will believe you? Who will believe you? So this section, after our cash flow statement, take note that the examiner said that we should use the cash flow to explain the situation to the worried director. So after your computation, no any there, explain to the worried director that, oh, from the computation, the chief financial officer have not invested any funds. Then you explain, go further. Why is it like that? How do we get it? That's all. So I'm done with the footnote. So I'm able to scan to the footnote. Now let's go to the financial statement, rough. When you come here, you are scanning for usual and unusual. So any item you see, please, cash flow, let me give you a hint. For cash flow, these are the items that we need. If the examiner gives us SS, reject the SS ones, okay? It's likely for you to see SS ones in your exams. Cash flow, financial statement that we need. One, we need only current, we need only current year's P&L. Only current year's P&L. Current year's what? P&L. Number 2, we need 2 years financial positions. 2 years financial positions. 2 years financial what position, that's all. So please, for every cash flow statement, that is what you need. For every cash flow statement. So if you are scanning to the financial statement, it means your expectation should be this. If there's not give you something funny, something other than this, don't copy, don't touch anything. I'll walk you through some of them. Now, you need only the current year's P&L plus 2 years financial position. 2 years financial position, the current year and what? Immediate year, the previous year, that's all. So these are the financial statement that you need. Anything other than this, don't touch it. In place of the current year's P&L, they can summarize the item that you need. They can give you profit before tax, or they can decide not to give this one at all. I've seen a question where they don't give this. They don't give you the current year's financial statement. So let's take note of that. Current and previous. So let me back this. You know, I'm solving one question, so but I have to make sure that by the time I finish one question, I've used to answer about 7 questions already. Now, let me project something on the screen. Check something for me here. Check this. This question is coming from where? Wax. This one look like a mocha. Wax. This wax question. Check the income statement. Profit and loss and other comprehensive income. They're giving them 2 years, right? So in that case, we need the current year, 2015. So the entire 2014, if we touch anything here, we are wrong. So when they give you the question, use your pen or your pencil to cancel the previous year's income statement. Cancel it from the question. You don't need it. They normally bring it by way of picking item here, and they mistakenly pick it there. Or some people too, they like finding difference, especially give them 2 financial statements. They like finding difference. Always they are finding difference. Item that they have to pick is they'll find different. 380 minus 180, you'll get 200 and come and put it there because the thought cash flow is always finding difference. But the balance sheet, you always find difference. Forgetting that balance sheet is a balance. P&L is never a balance, so you can never find difference. Simple as that. So take note of this. So that is it. But for balance sheet, you need 2 years. For balance sheet, you need what? 2 years. Current and what? Previous. Agreed. Without 2 years, you can never solve cash flow statement. And please, it's not always where we say current and previous. You can change the style. Use the date attached to it. I can say the question and put 2014 here, 2015 here. I've changed the narrative of the game. Even though in reality, in practice, it's supposed to be current and previous. The examiner have every right to change it. I can't even remember, around 2014 or so, ICL when we set the question, we never stated the date. We never stated the date. Like the question was like this. It was a cash flow question. And then we give them 2 financial statements with that date on top. We didn't give them the date. So how do you know whether this one is the 2015 and 2014 or this is the 2015 and 2014? We never give them the date. 2 years. So let's take note of that. I hope it is very clear. At least you must know what you are looking for, what they are giving. The mere fact they have given does not mean that you must touch it too. That's what some people tell us that. But they have given it to me. It means that I will need it. No. Overflow information is allowed. You just need the one that answers the requirement. That's why we always need the requirements first. That is why we always need the requirement first. So I'm done with this. So let me go. Thank God this exam did not do any funny thing. Thank God. I know that your own, in fact, they can do it for you.
So they wouldn't do anything.
No, like the P&L is not 2. It's not 2 years.
How would you do it?
If the P&L is not 2, then that one, like the one we are solving this one. Look at the P&L. Oh, they even give us 2 P&L. Wow. Wow. That is something mini business. So here, don't touch anything where 2009, use your pencil to cancel. It's not part of the game. Any figure you touch 2009, when you see it, it's wrong. Any figure. So normally I would choose these figures. 10,000, 8,000, 2,000, 200, 600, 150. If I see it anywhere, I'll mark you down. Simple as that. Agreed. Agreed. Then the question is, why is that they brought it there? Why? You know, exams, we are testing two people. We are testing those who obey instructions, and we are testing those who can produce for us. The thing is, they don't touch. Say, oh, why is it giving me a touch? They mark you down. Simple as that. That's our rule. Okay, so let's come through. Revenue. Here, if you are scanning to the P&L, please, the P&L, let me list item that you need. So I'll make the question look a bit straightforward. Every P&L for cash flow, things to look out for. Wow. So that means for cash flow, it has become very straightforward. First, look for what you call profit before tax. Search for it everywhere you can see. That's the first item you must look out for. Profit before tax, look for it. Second, look out for your interest. Third, look for your other income. Any other income. And then last one, look out for provisions and depreciations. That's all. Any other item they'll give it to you in this question, do as if it's not there. Interest and then the tax. Interest and tax. So I've given you 1, 2, 3, and 4. Only 4 items you must look out for in P&L when they give it to you. Any other item aside these 4, do as if it's not part of the question. Simple as that. So I'm going to scan through it for you. You know, I'm solving just one question, but I have to make sure that by the time I finish all cash flow questions, you can answer them. Now, revenue. Do I need revenue? Do I need to touch revenue? There's revenue here. Do I need to touch it? But they have given it to us. Do I need to touch revenue? No. I don't need to touch revenue. It's not part of the list. First, now confirm already.
Which one? Oh.
Okay. Now, first thing, what do you look out for in P&L? Profit before tax. Confirm that is there. Pay is there, right? 880. Then I'm very fine. I'm happy. At least I've gotten one tick. Second, what do I look? What do you have to look for?
Interest and tax.
Interest and tax. So finance cost, where is it? It's here. Finance cost is the same as what? Interest. Agreed. So it's there. So I'm okay. Income tax also there. Wow, I'm also fine. What's the next item you have to look out for? What are they? No, other income. Other income, right?
Yes.
So other income here. They are here. Income from investment property. Gain from fair value. Investment income. So these are the 2. What again do you have to look out for? Provision, depreciation, amortization, impairment. That one, the examiners are very smart. They are smart to the sense that they don't normally show them on the face. They added them, they capitalize them, added it to what? Distribution expense or administrative expense. So they'll pass a footnote to tell you that, oh, this admin expense includes the depreciation of this. That's all. Agreed. So those ones, sometimes you don't find them here. That's all. Any other items, do as if it's not part of the question. Agreed. Okay, I'm done. So I'm done scanning to what? P&L. We need only the current year. Nothing should come from the previous years. Now let me also scan through balance sheet for you. Balance sheet, what do you need? Financial position. Now for financial position, what you need is this. It should be something like balances. You need open balance and closing balance. So the closing balance minus the open balance, most often. That's what we do in the balance sheet. So balance sheet, there must be 2 years. I'm done. So let's go and scan through this question. Now, when I do this and when you start solving, within like 30 minutes, you'll finish this question right now because we have scanned through every item at the back of our mind. I'll be very fast when I start solving it. So when I go to the asset side, check the PPE. There's a footnote. So the PPE, you check whether there has been acquisitions, right? And definitely there'll be acquisition. Let me give you a clue, a secret. Anytime the footnote, there's disposal. When you do a computation, there'll be what? Acquisition of PPE. So let's take note of that. Have you ever asked yourself, we have a PPE, the amount is 3,720. We sold some, we depreciate some. Won't it reduce? But as rather what? Increase. So it tells me that if I acquire PPE during the year, simple as that. So I have to do those computations. So I'll walk you through that question, how to complete the PPE acquisition. Investment property, we've talked about this already. We find the difference, the rest in the P&L. Current asset inventory for working capital, right? Changes working capital. Bank, that is dash and then the figure there. All of them are for bank is cash and cash equivalent. Finance by equity. Now the equity side, take note of this. The examiner did the same thing in 2017 May, Haruna Limited, question 3. Everything here is the same. Let me even go there and come back, okay? Let me go there and come back. Let me go to Haruna. Just type Haruna to come right now. Haruna to come right now. May 2017. Yes, it's so we are at Haruna question. Now this May 2017 question number 3. This was their question. I just want to tell you that. Have you seen that year? Why is that year they give them only one P&L? Because the examiner know that the second year is irrelevant. Balance sheet should be 2. Go. Now have you seen the ordinary share? The road share deal. This is what I want to explain here. Share deal. Have you seen the share deal here? That's what you see in the Furusua. How we get it? Good. So let's go to Furusua. So that means I'm just giving this question as a trial work in advance. Once I've shown it to you, have you seen that? It is it. Oh, okay. It's been a video when you watch. It's been a video when you watch. Better when you see live and color. Amazing. Once I've typed it in, that means it's a question that we need to do justice. Okay, so let's go. This is 2011, question 2. I will see. Okay, that's November. I will need to write a puzzle. Okay, so question 2. Okay, so let's go to the balance sheet. So take note. Share deal is here. I wanted to explain share deal. I will put it here. Shareholders fund, we talked about it already. Share capital, that's the 3,000 and then the 1,200, we talk about it. Share deals, please, share deal. Just find the difference. If it increases, it's an inflow. If it decreases, it's an outflow. Agreed. After the exams, I'll explain the reason why it's like that. Now, when it increases, it's an inflow. That money is coming in. That's one of what share deal, share or treasury shares. So here, just find the difference. So here, has it increased or decreased? It has increased by what? 200. So when you are writing your financing activities, just write share deal 200 positive figure. You are done. Agreed. Then revaluation. We use revaluation to calculate the acquisition of PPE. Find the difference for me. What is the difference between the revaluation? 100 and 300. That's 200. So to go to where? The PPE acquisition. That's all. No, the revaluation reserve goes to PPE acquisition. Share deal goes to financing activity as inflow when it increases. When it decreases, becomes an outflow, but it will always increase. Simple. And we are done. Have you seen? Now let's go. All the non-current liabilities, with the exception of deferred tax, should go to financing activity. Loan note. What do you see here? The loan note. What's the amount here? 800. But at the end, it is what? Dash. It means that the company paid all the loans. And that is why it has decreased the cash. And so that director, we have to refer him that we had a lot of money. Yes, it should have a lot of money. But we paid our debt. So that's our cash balance is what? Negative. So that worry director, that's the answer to the question. Deferred tax, please, I want you to compute the taxes. So don't worry. Current liabilities, trade payable will be used to compute what? Change working capital. Bank overdraft will form part of cash and cash equivalents. Warranty provision, I've talked about it again. I've talked about it already. Current tax payable, this is complete for tax paid. They are done. That is all. Basically, that's all for this. So once we are done with this, we now go and solve the question. So friends online, by now, you must have had about 85% of the question. So if I close the question blank like this, you should be able to tell me everything about the question. Note 1, what is there? Note 3, what is there? And then the balance sheet and the Icag. So let's start the work. Where do you start from? Right after this. We already have our format down. Let's go to the format. I tell the examiner that we are starting from where? Cash flows from OA. Please no shortcut. If you write OA in exams, I'll just write TNT to it. So that's OA travel and tour. I circle. So write it in full. Or you can just write operating activity. No OA. OA is a circle, not in financial reporting. Good. Now, where do you start from? If I start from operating activities, start from your profit before tax. Agreed. So write your profit before tax. Locate the profit before tax. Before tax. What is the profit before tax in this question? We saw it, right? And we're so happy. We saw it. We're so happy. So let's go. So here I'll be very fast. Extremely fast because we scanned through the question already. Profit before tax 88, right? Where's 88? Okay. So let's go and put it in. Can you put it here? 80. Immediately, don't rest. Immediately, don't rest. Tell the examiner. Add back finance cost or interest expense. Did I write the interest expense or finance cost? Go to the question. Everything should come for the P&L. What's the finance cost here? Finance cost, show yourself. 100, right? So add it. And this format should not depart from you. This format should not depart from you. So let's go and add it. Finance cost is 100. When you add, what do you get? $980. This 980 is called profit before interest and what? And tax. So I've given you a very nice way For those who want to do ratio and store 20/20, profit before interest and tax is also equal to profit before tax plus finance cost will give you profit before interest and tax. Agreed. So, yes. Yes, it's in brackets. Yes, but here we are adding back. We're just picking it and add back. Yes. We are picking it and then add back.
So or that we add it back.
Yes, we are adding back. Always, you have to add back. Then let's go. I'm supposed to continue from here, but I'll continue from another page. I still have my two reporting currencies here. Have you seen? Yes.
But in the footnote, we had again we should transfer finance.
Oh, that one there. That one they've already added to admin. So we reverse it. We'll come to that one. It's an adjustment. So right after the profit before interest and tax, what do you go to? That is an adjustment for like this. Now let me go. Adjustment. These are the items you must adjust. Let me go. If you're looking for the adjustment, let me just place them here for you, okay? So that the question becomes so or too empty. Adjustment number one, look for your depreciation. In the question, depreciation, very important. Number two, look for profit or loss on disposal. On what? Disposal. Number three, look for alien investment income. I call them alien. Investment income. If I look for number four, accruals and prepayment. Accruals and what? Prepayment. That's all. So these are the items that you must eliminate. In fact, I call them the big three. One, non-cash item. The big three, non-cash items. Two, accruals and prepayment. And number three, alien. All the strangers. All the strangers. Who are the strangers? Any profit which is not coming from our core trading, but they have added it to their profit, they are alien. Take them to investment activity. Simple as that. These are the other income. All the other income. All the other income, please reverse them. Simple as that. So if you check, let's go to the previous page. If you check all these four items I've given you, it's made up of the three. This is the alien, and this is non-cash item, and this is accruals and prepayment. That's all. I cannot list all of them for you, but I can give you what the principle behind the general. So the adjustment for first in depreciation, and every examiner will give you depreciation. Let's go. So write here depreciation. Depreciation in this question is what? Who can tell us? It's 556 or 56,000. I think I saw it in the question. Is that 56 or 556? Depreciation is a note. Note number 560,000, right? 560,000. That's note 2. That's depreciation. So that's what I'll okay. So that's the only non-cash item that we have here. So you can record them here. 560,000. So now Servicing, go by the format, no. Just go by the format. What's the non-cash item depreciation? We are done. It can also be impairment, amortization. Accrual, don't have accrual in this question. Wow. This question don't have accrual. What a good news. Then that means this question will have alien, a lot of strangers, staff, items that are not operating activity. By one way or the other. Okay, so sorry about that. Let's continue. Oh, I've lost the write-ups, but you'll be fine. Okay, so okay, so sorry about that. Let's continue the game. Oh, so this I have to write it again. Wow. Yeah. First of all, I hope you remember. So let me go. Question number 3. A. Statement of cash flows for the year 2. Oh, all this good stuff. We've lost all of them. Don't worry, to be part of the video. So that I might not be able to produce the whiteboard. Okay, so I wrote here operating activities, right? Cash flow from operating activities. You can underline it like this and do something like this. The first item is what? We wrote profit before tax. And I think I had 880. In fact, this one too, we had 100 B here. We said interest. No, we use another word. There's a word there. Add back. So add interest of finance cost, which is 100, right? Then we had 980. And I went to the next page and I wrote this adjustment for, right? And I continue my currency. And I write, in fact, I wrote here adjustment for, and I listed items for you. Number 1 is depreciation, which we have 560,000, right? The next one will be the alien. So go to the P&L, all the other income, reverse them. Go to the P&L. All the other income, reverse them. All. Don't even leave one. So let's go. We are there. There are two other income there. The income from investment property, right? 80. Reverse it. Gain from fair value valuation. Reverse it. These two. Reverse them. So let's go. So let's reverse these two. Now, reversing means if they have added to the profit, what do? You subtract. If they have subtracted, you add back. Simple as that. That's the reverse. Because it's supposed not to be there. And they have done it. So do exactly opposite what you've done. So 80, what's the name? Investment income, right? Okay, so I'll go there. And then I'll reverse the 42 in addition. So right there, investment income. It is 80,000. The next one is fair value gain on investment property, which is 40. Now, the loss on disposal, let's go and compute the loss. You know, when there's a loss, it must also be reversed. It's also part of what? Alien. When you sell your PP and you get a profit, please, it is not an operating activity. But because the P&L don't have profit from operating, profit from investing, and profit from financing. How do you get it? P&L don't have those profits, those demarcations. So you must reverse it here. So third example, loss. Loss on disposal. Now let me start again. Depreciation, should I add or should I subtract? Depreciation. They have what? Subtracted it from the profit. So I must do what? Add back. So that one will be positive. Good news. Investment income. They have added to the profit. So should I subtract or I should add? So investment income must add. In fact, must subtract it here. Fair value gain. They've also added to the profit. Should I subtract or I should add back? After what? Subtract. Loss of 180,000. Loss. Have they added to profit or they subtracted it? They have subtracted it. So do you have to add back? Add back. Or I should subtract. I should subtract. Yes. Yes. In fact, he said we should subtract, right? Yes. This is why. I like that. Convince us more. Should I put a bracket there? Why? Loss. Why is that we should subtract loss instead of adding? Let me see. Someone who said yes. Okay. Mr. Eric, kindly explain to us why you said we should subtract loss. If I can hardly hear you. Okay. In fact, you have to add back. Always look at what they have done in relation to what the profit, loss. Have they added to the profit or they've subtracted? They have subtracted. So if I have to reverse it, I must do what? Add back. Have you seen? So I'm done with this section. Let's go to the footnotes. If we do have any stuff, anywhere they mention admin, anywhere they mention, let's go to the footnote. They mention admin, someone who can tell me the penalty. So we have treated this loss of 180,000. That's note 1. Depreciation, touch it. Investment property, have touched it. Let's go to note 3. The loan notes were redeemed earlier than agreed in the loan agreements. That's incurring a penalty of 40,000, which has been what? Charged to admin. We said that this is not admin cost. This is what? A finance cost. Simple as that. So let's go and take it off. Now, adding something to admin, who can tell me the impact on profit so that I'll plan that person accounting cracker for the night. When I have added something mistakenly to admin, what will be the impact on profit? Who can tell me? It will reduce profit, right?
Yes.
That is correct. I think the final marking scheme is review. Any other one? It will only reduce profit, right? Or to do something else again. Better to increase it, Abby.
I'm not yet.
Oh, okay.
Don't put person.
Tax paid will increase.
Tax paid will increase. Okay. Wow. If I added something mistakenly to admin, what will be the impact on profit? In fact, the examiner is supposed to tell us profit by mention admin. In fact, the first answer is correct because admin will always be subtracted from where? The profit. So if I add something to admin, that means it's the same as me subtracting it from where? From the profit. So it has been subtracted from the profit. So what do? If you're going to reverse it, you add back. So let's go and add a penalty of 40,000 bucks. Right here, penalty. $40,000, right? In fact, I am adding back because it's subtracted. Is there any other one again? Where they've mentioned? But there are many no. Because we've gone to the footnote, all of them are in. They also mentioned something. Warranty provision. Have you seen? Let's go to where they mention warranty provision. Note 5. Let's all go to note 5. Officio gives 12-month warranty on some products it sells. On product that it sells. So the amount shown in the current liabilities as warranty provision are the accurate assessment. This one will talk about it. It's a warranty cost is included in cost of sales. So just go there, find the difference. We have 200, right? So that means they have added charge additional expense of 200. So if they have charged additional expense of 200, what will be the impact on profit? Have they added to profit or they've subtracted from profit? If we have charged additional expense of 200, will it reduce your profit or increase your profit? It will reduce, yes, because they will subtract from where? Profit. So what do? You add back, agreed. So any expenses charged against profits wrongly, you have to do what? Add it back. So yeah, add 200. But you're sure working. How you got the 200? Don't forget the 200 is not in the question. So here, warranty. Open a bracket, 400 minus what? 200. What do you get? 400 minus 200. That will give us 200. I'm adding back. Agreed. Okay. So that is that. Any other one? Now we have to consider. In fact, we are now on operating activity. In fact, cash flow is operating activity that worries. It's plenty. So let's take note of that. Okay, so I think I'm done. Within the next 20 minutes, I must end the game. So kindly sum them up for me. So let's go.
Please, the figures in the additional info. I think in thousand. You already showed the.
It's in thousands. So I've recorded all of them. That's why this one they look a bit some way. It's true. You must cancel this, cancel this, cancel this, cancel this, cancel this. Before I'll be fine. You have to cancel all this. Now this I have to maintain it. Because this 40, I pick the 40 from here. It's in thousands already, so there's no need for us to show the last 3 zeros. Agreed. So there's no need for us to show the last 3 zeros because of these thousands, 3 zeros raised. Wow, that's very good. This have to be exams 0/20. Oh.
Because of the zero.
Yeah, because of the zero, I'll mark you down. Straightforward, this one. Wrong, 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 wrong. This one is correct. That's all.
Which one is correct?
Only the last one better get correct. Down root 200 here.
What if me? I don't read three
If you don't read 3 zeros, if I don't see this one here like this, oh, that one, God will touch my heart and mark it correct for you. So that would be like this, correct, 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 correct. But if there's any place where I need to convert thousands into millions, and you omit 1 0, in fact, I'll not forgive you and mark you down. Simple as that. But you must go by our 3 zeros. So that is also, so just record them again, so that we must take off the 3 zeros from there. Okay, so let me record them again. I wanted to shift this one here small. Okay, so let's go. Okay, so let's go. Okay, so can I give the figures again? Depreciation is 560. Investment income was 80. Fair value gain was 40. And then we are subtracting these two people. Loss on disposal was 180. We're adding back. The penalty was 40. We're adding back. Warranty provision is also 200. We're adding back. Agreed. So let's add all of them. Why is the thing has shifted? No alignment there. Okay, so let's go. So when you add all, you get what? So 860. I'll take that. Now let's go. What do you do again? You go to the 10 text. Changes in what? The working capital. So let me start from here and come and add here. Okay, let me do something here. Okay, good. Let's go. I want to do this one here like this. Wow, so here should be 860, right? Now come here and tell the examiner changes in working capital. In the bracket, I call it 10 ticks. The total ticks you must score there should be what? 10. You must score total ticks of 10. If you do nothing, you must score 8. The one that will do something will score the 10. So let's go. Let me do it on this side. Now let's start. What are the 3 items? Inventory, trade receivable, and what? Trade payable. These 3 items. Take note of that. So let's go inventory. So here you check whether inventory has increased or decreased. So just check for me. So let's go. Inventory figure. Where are you sure yourself? Inventory is here. I started 1,620 and then it's 2,440. Increase or decrease?
Increase.
Sure. Yeah, I can see decrease. So
Increase you.
best I decrease, right?
Slow down.
Okay, that is.
No, up. It's increase. No, how many?
In fact, it is what?
Increase.
From here to here. Have you seen that? I just wanted to be sure, that's all. So you find the difference. 244 minus 1620. Answer. So when you come here, please go by what we are doing. So just write here, increase in inventory. Open a bracket, 24440 minus 1620. Do that computation for me, whether you know or you don't know. Do the computation for me first. What do you get as the difference? 820, right? Don't put it in bracket. Don't put it in positive. Leave it like this for the meantime. Let's go to receivable. Let's go to receivable. Let's all go to receivable. Receivable, why are you sure yourself? Thank God the examiner wrote trade receivable. What's the figure? It has moved from 1,080 to 960. But it has increased, right? Decrease from 1080 to what? 960. So the difference, what do you get? So let's go and put it in. So third examiner, decrease in trade receivable. Open the bracket, 1080 minus 960. Doesn't matter. What minus what? What matters is this. You are finding the difference and you know that it has increased or decreased. It doesn't matter whether open balance minus closing balance or closing balance minus open balance. You are finding what? The difference, and it has decreased. Come and put the figure here. What's the figure? 120. So 120. Go to payable. Here, don't score anything wrong. I'll ask you. This video, after the exams, I'll release the latter part. After the exams, I'll release the latter part of this video to you. Yes.
Which exam?
After on the 4th, by this time, that one I can easily release it. Yes. Now let's go to trade payable. Trade payable it has moved from 2240 to 2,400. Increase or decrease? Increase. So increase, just right there, increase in trade. Don't look for whether it's inflow or outflow now. Just do the computation for me when we are done. So 2,400 minus 2240, answer. Now when you are done like this, if you leave it like this, you have scored yourself. In fact, you score at least, the least score should be 8 ticks. For the one that will do the thing correct, will get 10 over 10. So which one do you want? If you don't know anything, you have to score 8. If you know all, you must score 10. So what's the difference between the one who don't know and the one who knows? Only 2 ticks. Agreed. Now when you are done with this, if you leave it like this one call it synthetic method or scientific method. You score some and you lose some if you leave it like this. So now let's come. Increase in inventory. Is it inflow or outflow? When inventory increases, is it inflow or outflow?
Outflow.
It's an outflow because we are now buying more goods, but money. So outflow should be what? Negative. I could have got it wrong. Okay. Decrease in trade payable. So trade receivable. Is it inflow or outflow? Decrease in receivable. Inflow. So positive. You could have scored it correct. Have you seen?
The other one
Let's
positive.
go. Good. Increase in trade payable. Inflow or outflow?
That one too plus.
Inflow.
Come again.
Inflow.
Inflow. Good. Inflow should be positive, right?
Yes.
Okay. You score only one take round. The rest are correct. If you leave it like this, synthetic what betting, scientific one. Have you seen that? Yes. If you leave it like this. So for those who be doing inflow, outflow, You are there just doing computation for the examiner. Abigail. So add all the three together and let's call the 10 ticks. Let's order all of them. 820 plus 120 plus 160. Don't forget some are negative. 540. Count for me the 10 ticks. 1, 2, 3, 4. Then all of this. 2, 2, 2, 3, 6, making 10. So I call it 10 ticks. 10 solid ticks. If I have no idea, you must score 8. That means you got this one wrong. If this one happens to be wrong, this one also be wrong. So 2 wrongs out of 10 will be what? 8, right? So if you don't know anything, you must score 8 ticks out of the 10. If you know, you must score the 10. So what's the difference between the one who don't know and the one who knows? Only 2 ticks. No, the one who knows will take time to analyze it. The one who don't know after this, I'll leave it and go. Yes. So that's all. Okay, so kindly add all the 3 items together. So far, we have 3 totals here. Starting from the top, we have 980, add 980, 860, and then 540. Add them together. 540 is negative, thank you. It's true. 1,300. Agreed. So that is 1,300. 1,300. Now this 1,000 we call it operating cash flow before interest and tax. Operating what? Cash flows before interest and what? Tax. Agreed. Now, let me tell you the good news about indirect method. Indirect method, we pick one of the profit before interest and tax. So this one is called profit. Let me write it to profit before interest and what? Tax. We pick this one and we massage it. We adjusted it. We massage, we revise, we update, we in fact manipulated it well because it's a profit. You told us that profit is not equal to cash, right? So we massage the profit well. And now we are getting a cash flow. Wow, what a good news. I've gotten a cash flow. That's what you call indirect method. Imagine that you have your key to your room and the key is missing. How do you manage to get, in fact, in? Tell us. How? You know that one of the windows is not good. So you're going to use that window. You know for sure that there's something when you press, but the door will open. You're going to use what you call indirect method to enter into your house. Either you pass through the kitchen or pass through the hall. You can never pass through the main entrance. Or you have to climb and jump the wall. Have you seen that? That's what you've done here. We have used the indirect method to arrive at what? The profit.
So in the exam situation, they normally do the indirect.
That's what they're going to do on the 4th day of April 2004.
They've already told me.
2022. That's what they're going to do. It's an indirect method. I say we only examine indirect methods at level 2. Actual, we examine both direct and indirect method actual. So expect what? Indirect method. Agree.
Actual.
Yes, unless you're writing actual, then you expect direct method. Let's go. So now, if you are going to Kaswa and you are before Odoko and Malam Junction, what is your next destination? You are going to Kaswa and before Odoko and Malam Junction. The next destination is what? Interest. So that's Odoko. So now, if this is operating cash flow before interest and tax, the next item is what? Interest paid and tax paid. That's all. So right here, interest paid, and right here, tax paid. That's all. Then we are done with operating activity. Tax paid. And you must conduct workings on these two. They are not free. Tax paid. Agreed. They are not what free, and I walk you through how to conduct their workings. Simple as that. Only 3 steps. 1, 2, 3. Who can tell me? In the very first video, the one I posted is inside the 3 steps. What are they? Anything paid. What are the items that you need? You need 3 items. Anything paid. Okay.
The opening balance.
The opening balance. That item is less to receive. Yeah, done. Agreed. These are the 3 steps. Yes, you get it. So let's go and work out for the interest paid. Now, let me give you a clue. Let me do this. First online. Kindly tell me the difference between interest expense, interest incurred, and interest paid. These 3 terms, are they the same or they are different? If they are not the same, tell me they are different.
What I know is they are not the same, but has to be.
First line, what's the difference? First line. Oh, they are the same, eh? I think it was mentioned inside the first video, it was not mentioned, eh?
You said it.
Eh.
But it turns out.
Okay, so interest incurred and interest expense are one, no difference. This is what you're supposed to pay. Total amount you're supposed to pay, total. And this is what is actually what paid. So normally the total is equal to what you paid plus what you owe. Agreed. How we get it? So that is all. So here we are interested in what you have paid. What you have paid. So here check first thing. Let me give you a shortcut. To get the interest paid, first thing, go to the current liability. Check whether you see interest there. That's the first thing you must check. Let's all go to current liability. I hope this I remember in the exams. I remember cash flow is plenty, but not difficult. Go to current liability. We are here. Check. Is there any interest here among the current liability? Interest? No. There's no interest, right? That means no interest owed. Because if they are owing interest, it will appear among the current liability. So as a result of that, there's a good news here. The interest expense is the same as the interest paid. This guy. So this interest expense of 100 is the same as what? The interest paid. Why? Because there's no interest owing on the balance sheet. So they are not owing any interest. And if they are not owing, then that means whatever they're supposed to pay, they paid all. So they are not owing. So therefore, interest. If there's owing, then you don't do the adjustment. Open balance, that item, and closing balance. I'll do it for the tax. For the tax, you do the computation. So I'll do that computation with tax. So come and copy this 100 there as interest paid 100. And put it in brackets. Agreed.
Why brackets?
Paid. We are subtracting because they are paid. It's an outflow.
And what the question is about interest, that interest, where
in fact, bank interest, another interest, interest on loan. In fact, a lot of interest is right. Don't worry. For cash flow, they will not do that. They'll do that in final account. It's in final account, the trial balance. Now, in some all of them have agreed. But in the cash flow, no. They'll give one. Now, let's go and talk about the tax paid. The tax paid to go to the same trial balance. Sorry, financial statement, the balance sheet, and check whether you see current tax among the current liabilities. Is it there? The last item. So that means you must massage it. You can even see deferred tax here, right? That's a very good question. But this question have everything. It's a question of integrity. Now let's go and do the workings. So first workings. Wow. We have calculated, we have not done any working. Can you do this in P&L computation, comprehensive income? You calculate no workings, only cash flow. You can even finish without even doing working. Only 2 workings you have to do. And you say you not do this on 4th day of
Family life. That's you.
Okay, so here workings. Third examiner workings. These are fresh workings. Workings number 1, tax paid. Anything paid, don't worry yourself. Look for the open balance of that item. Add that item from the P&L. Add that item from the P&L less what? Closing balance. That's all. I'm done. And so anything paid. So even if the interest, you saw balances among the current liability as interest, the same show you have to go through. I will get it. So the same show you have to go through. Let's go. So let me go and pick the opening balance for tax. So go to the current liability. What's the current year tax? 300 as closing balance, 100 as what? Opening balance. Please, if you pick it, kindly add the figure for the deferred tax in addition to the current. All of them are tax. Every tax be taxed. Add them together. So the opening balance, pick the one under the current liability, 100, plus the one under non-current liability, 60. Agreed. So it will be 100 plus what? 60 as the opening balance for deferred tax. Agreed.
Yeah, they are all tax, so we should add all of them.
Yes, please. Every tax be taxed.
For 2 years.
No, year by year. We are doing the opening balance. Where's the opening balance? Opening balance is where? 2009. But opening balance, there's one called deferred tax, which is 60. And there's one called current tax, which is 100. So add these two together.
But you said we are not using the previous year, but the current year. So why are you adding?
That is the P&L. That we only need the current year. Balance, we need 2 years. This is a balance sheet. This balance financial position, we need 2 years. Automatic. P&L is where that one we need only the current year. Agreed. Is it? Okay. Now we are looking for tax, open balance of tax, right? Now there's current tax here and there's deferred tax. And we are saying that every tax be taxed. So just sum them up. So we are looking for open balance. Open balances are here, right? Previous year. So pick the one under the current, which is 100. Add it to the one under deferred tax, which is what? 60, to get the open balance of both current and deferred tax, which is 160. So let's go and then add it up. Okay, so I'm here. So I'll do something like this. 100 plus what? 60. And I'll get 160. Do the same thing for the closing. Let me do the closing also here. Let me do the closing. Closing, why you show yourself? 300 plus what? 100. What do you get? 400, right? First line, you are going over. What do you get? 400. We are less in the closing. Now, the middle one, add the tax expense. So tax expense, pick it from the P&L. So go to the P&L and pick the income tax expense for the current year. Agreed. For current year, what's the tax expense? 320, right? Tax expense is 320, right? 320. So go and add. So here we are adding. We're adding 320. Simple as this. We're done. So 160 plus 320 minus 400. Answer 80. So that's the tax paid. Right there, tax paid. Is it difficult? Not at all. No wonder we don't bring cash flow. Cash flow is like only good years. In fact, history wants to repeat itself. History wants to repeat itself. Are you writing in May, right? Are you writing in May? Or not? In fact, are you writing the first batch in the year, right? It's first batch in the year. Oh, okay. Oh, okay. It means that Haruna is trying to visit us again. Haruna came in May 2017, the very first batch in 2017, question number 3, cash flow statements. And then which you're writing when. Now, after 2017, the last one was 2018 November. It was a cash flow for a bank. Cash flow for what? A bank. Since then, why Dodge? Cash flow have never dropped again since 2018 November. So since 2018 November, so count that year up to now, how many years so far? So 2019 November, 1 year. 2020 November, 2. 2021 November, 3. 3 solid years, 6 sittings, cash flow have not dropped. Why? Why? So this sitting, it is clear that cash flow must what? Visit us. Simple as that. However, any year that we have the vision, it will come on, but it will come in a different folds. That November 2018, we told them they will have cash flow, but they had a cash flow of a bank, not straightforward. So I'm not be too surprised you're going to have cash flow of what? Insurance or mobile money ventures. How to get it? You go and see this normal cash flow that they said to come. Yes, it's there. It's normal cash flow. But it's not a normal cash flow that we did in class. It's not a normal one. I won't hide anything from you. I won't hide anything. In fact, that's how we do our things. We can tell that yes, you have a cash flow, you go with this cash flow, but it's not normal cash flow. In fact, you can't even know where to start from, where to end. Where to, in fact, where to even start reading, grab become an issue. Where to start reading, become an issue. Because what we did in class is 2-2-2, even though the requirements are the same, but the scenarios are not the same. So let's pray that they shouldn't do that to us. That's all. Let's go. For that one, there's nothing we can do about it. Okay, so let's go and put it in 80. So 80 here. So third exam now, net cash flow from where? From OA. No shortcut. You write OA, then you know. I just add TNT to it, making OA travel and toll. So add up 1,300 minus 100 minus 80. What do you get? 1,120. Wow. Please let me go and write at the back here. I find it difficult to write because this side, I'm going to write it here. So net, in fact, we are done now. Once we are done with this side, so net cash flow from where? OA 1,001 to the agreed. So from here, where do you go to? Where do you go to from here?
Is it 1,120?
That's 1,120, right?
1,000. I thought you were dancing.
Yes. Okay, so let's go. Cash flow from where? Investing activities. So let's go. Investment activities. For investment activities, check sale of what PP. Any PP they've disposed of. So let's go. Here, do you have something like that in the question? The sold PP. First of all, write investment income here. Investment income. Investment income. In fact, let me make this thing big here, okay? Let me make this thing big so that I can write. If that writing is not nice, the only thing I have to do is write big. If I try writing small, and I don't see, I'll be in trouble. In exams, we like writing big. Even if you cannot see what you can still see it. 1, 1, 2, 0. That's also come down. 1, 1, 2, 0. So the investment income should be here. We had 80, right? Then proceeds from disposal. Proceeds. From where? Who can compute it for me? Let's go. Number 2, the proceeds. How do you compute the proceeds from disposal? We said that it must start with the proceeds. We don't know, right? Less current amount. They give us current amount to be 480. After lessing, they had a loss on disposal of what? 180. So therefore, who can tell us the proceeds? We had 300. So if you have done these workings nicely like that, you just have to refer the examiners. If you have not done the workings, don't worry. Do it on the face for them. They'll mark it for you. So you can open a bracket here like this. How do you got the 300? It's 480 minus what? 180. Agreed. You put your 300 here nicely. Will it be positive or negative? It is positive because here they sold PP. They're receiving money, so it's an inflow. Please, here we are not doing reversal here. All the reversal end with the adjustment. So take note. Only the adjustment, the items in the adjustment you are going to reverse. Take note too that only the item in what? The adjustment column. That one, you check whether they've added, you subtract. Whether they've subtracted, you add back. Aside this, the rest, they take their normal or their rightful position or the rightful place. If that thing is a payment, it's a payment. Simple as that. Here is an income. Why are we subtracting income? Why? Income is supposed to even add, but we are subtracting it here. We are subtracting because we are adjusting the profit. But why is that here? The same income. The same income is being added here. This is a rightful position. So you take it what? Rightful stage. Simple or rightful stand. We are done. If it's an inflow, it's an inflow. It doesn't matter what you have done to it. Is there any other item? Right here, purchases of PP. Purchases of what? PP. Workings number, let's see, number. Workings number W, let's say W3. Let's go workings number 3. Let's go do it. So workings 3, let me do it here. PP. Wow. Look how I'm going to do it. This is about PP schedule. Yeah, one logo line. Go by this approach and you are fine. There are so many methods. You have the course, whole lot of methods. But I think this one of the best. So let's go by it. Let's go. Start with the open balance. You are ICA, so I'm not right open balance, right balance go down. Everybody understand, right? Elsewhere, if I write balance go down, they'll ask me, where is it coming from? If write debit, what's the meaning of debit? Where is it coming from? I told them that that's yes, the accountant, not me who got the debit. I'm here to just explain. And listen that. So balance brought down. Write your balance brought down. Pick the current amount. Pick what? Current amount. So in a situation where the examiner give you cost accumulated depreciation, pick what? The current amount. Wow. This one you have to use, in fact, if you the red pen or fire pen, so that you can remind it. In fact, you can remember it every time before the exams. Let's go. Then let's go and pick the open balance from the question. PP open balance. Why you show yourself? PP open balance. Well. 3720. Agree. Yeah, done. 3720. So let's go to the question. 3720. Don't forget your reporting currency. 3720. Now, number one, let me even name them for you. Number two, look for your depreciation immediately. Depreciation. What's the depreciation figure? It was 56, right? Or 560. Depreciation was 560, right? So write your 560 here. Should I add or should subtract? Depreciation, do we add the current amount or we subtract? Thank you. We subtract. So I'll do that. Item number 3. Look for disposal. The asset that is sold. Disposal. What's the current amount of the asset that is sold? The current amount. We had what? 480, right? Do I add or I should add? In fact, do I add or I should subtract? Current amount of the asset that they dispose of. When you sell asset, will it reduce the pool or rather increase the pool? It will reduce the pool. So therefore, current amount, you subtract. So put it in bracket. Agreed. Item number 4. Acquisition of asset on credit. If you buy asset on credit, we don't have some in this question. The mere fact that we don't have does not mean we cannot examine you. Let me put that here. Number 5. Check whether there has been a lease. Now you pick the fair value. Dash, we don't have some in this question. It does not mean that we cannot test you on that. And then number 6 is what you are looking for, the balancing figure. Cash, right here, cash. That's what, in fact, let me even add that one before I go to number 6. Number 6, let's write revaluation gain. Now we have some in the question. Revaluation gain. Now we have some words in the question. Then I'm listing all the items that you need. Have you seen this credit? Credit purchases. They bought some of the assets on credit. Bring it. Let me even prove to you where you can see some of this, the credit side. Let's go to the question. Now I'm going back to Harina. And now another question, it has been solved. I'll share the video. In fact, the video I've shared with you already. That's what I want to share with you. I've shared the video with you for Haruna. It's among the list I gave you.
Today.
Oh, long ago. Last Monday. Have you seen? Last Monday, I was posting some videos on the page for you. Plenty stuff. Okay, so let's go, Haruna. Haruna, let's go. Good, Haruna is in. Now, this May 2017 past question. I like this question because the examiner took his time to articulate the thing well. But somebody had 17 over 20. Yes, 17 out of 20. And the person is first question. He had 20 over 20. That's question 1, Gantaba and Asmataba. Unfortunately, The person did not answer any question again, so he had 37 out of 100. Unfortunately, the person scored what? 37 out of what? 100. You got 20 out of 20, 17 out of 20. Now, check here. Some 50,000 in it. Land costing 50,000 was purchased on credit. Land costing what? Was purchased on what? Credit. The amount is included in the trade and other payables. So you go and take it off. So this 50,000, that is the credit aspect I place here. This credit. So I'll come and put 50,000 here. If to be Haruna. Have you seen? The paper like this. But this question we don't have. It does not mean that there's no, we cannot bring it. Let me do something for you, okay? Let me arrange in a way that the two that we don't have should be the very last item. Agreed. These two that we don't have in this question should be the very last item. Let me arrange it that way for you so that it will be very clear. So that I can do my thing. Other than that, I have to go to the next page. I don't want to go to the next page. So don't change this thing, your format. This is revaluation. Revaluation, we have some in this question. So check the revaluation. So let's go to revaluation. Haruna 2, I think there was revaluation in Haruna. Yes, there was revaluation. There was revaluation, yes, there was revaluation. So let's take note of that. Let's go back to our question. Okay, so let's go back to our question. Yes, we are here. So check revaluation for me. What's the revaluation reserve? It has moved from 100 to what? 300. So it has increased by what? 200, right? So we call it revaluation gain. So let's go and add it. How do you treat revaluation gain? You add it to the current amount of the asset, right? So this revaluation gain. Open a bracket, 300 minus what? We get 200. Should I add or should I subtract? I'll add because revaluation gain what? Increases what? Asset value. What if it was revaluation loss? I'll subtract. Simple as that. Agreed. Okay, I'm done with this. Any other issue here? No. So the number 5 and then number 6 is the one that we don't have in this question. It's a credit. And then the lease or transfer. They can transfer assets from Tamale to Boku, from Accra division to what? Nigeria division, from Yendi to Walewale, all of them. Wherever they are moving it from, you subtract. Wherever they are getting is you add. Then number 7. Can I put dash here? By next time, if you do this, I understand when they're coming from home. And I'm to write and put that dash. We'll know where you can. That means you are copying the format for us. Number 7, right here, cash. And it's the balancing figure. Tell the examiner, balancing figure. Leave enough space and underline this. And right there, the closing balance, number 8. Balance what? Carry down. Go and pick it from the question, from the balance sheet. Again, pick the carrying amount. Let's go to the balance sheet and pick the balance carry down. What's the balance carry down? 5760. So let's go. 5760. Okay, so add all. If there's no balance, the difference is what we are looking for. So add all if there's no balance. Let's add all together. 3720 minus 560 minus 420. Oh, the items are not even many here.
28.
288,888, right?
2880.
2880. That's a balancing figure. 2880. So that's the purchases of what PPE by cash. So don't know they bought PPE with what? Physical money. So let's go. So purchases of PPE, bucket number 3. We've done that. We have 2880. Put this in brackets. Agreed. Okay. First one, I hope you get it. Let me just balance it off and run away. Now, that's all. Unlike all. Unlike all.
Yeah.
80 plus 300, what do you get? Someone want to ask a question. Can you ask the question? Let's go. Okay, no question. Sorry. 80, 300, 380. When I take it off. So 380 minus 288, 2,500. So put it here. Yes, negative 2,500. In fact, step him down. Why? Step him down and name it. What's the name? Net cash flows from where? IA, internal assessment, no shortcut. Investing activities, net cash flow. Is it?
So we should start with that.
Yes, step him down. Yes.
So we won't take it from the net cash flow from operating.
When they're done with the finance, you come and add all the three together.
All the three.
Yes, all the three.
That's what you said.
And that's why you have to step him down. Now let's go to the next one. Friends online. Okay, so let's go. I'm continuing from the next page. Because this one cash flow from where? Can I just write FA? Financing what? No shortcut to, if you write FA, that means financial accounting. Football Association, GFA. And first I'm reading here for you. Okay, so financing activity is about equity and what? Liabilities, non-current liability, that's all. Equity and non-current liabilities, nothing else, nothing more. So go to equity and just define the difference one after the other, that's all. So we are done. Anytime I get to financing, I'm so happy because we are balancing it off. Go to equity, check the one after the other. Shareholders fund or the stored capital. You can see it has increased from 1,002 to 3,000, right? I would say it's an inflow. Shareholders fund, that's the stored capital, has increased from 1,002 to what? 3,000. And we're told that they've issued what? Shares for cash. So go find the difference. Then there's a proceed of issue of shares, or just write issue of shares, or you can just tell the examiner the proceeds from where? Issue of shares. If you don't want trouble, just write issue of shares and go away. Have you seen that? You do your computation, it's equal to the 3,000 minus what? 1,002. And that'll give us 1,800. Agreed. Check them one after the other. Don't jump. We beg you, please don't jump. It is haram for you to jump. Don't jump anything. I'm done with the stored capital. What's the next item? Share deal, right? So go to share deal. Check, has it increased or decreased? It has increased, which is inflow. Don't jump anything. So share deal, it has increased from where? 0 to 200. So the difference is 200. So an increase means money has come in. So can record share deal. Share Deal. 200. Yeah, don't come and tell us that 200 minus 0, obviously. That means if you do something like this, I know where you're coming from. That means you are fighting for tricks. You are winning, you are fighting for tricks. You are fighting for tricks. Have you seen that? Let's go. One after there. Don't jump. We beg you, don't jump. Revaluation reserve, we tackle it, right? Retain earnings, right against it if you have the hard copy. It will be used to compute dividend. Use the retained earnings to compute what dividend when not given. If they have already given you dividend, don't touch the retained earnings. Simple as that. Agreed. So use retained earnings to compute what? The dividend. That's the last calculation I'll do for you. Let me go to the non-current liability. What's the loan? Loan note. Open balance is 800. That's decreased to what? 0. So that means they paid all the loan. So tell the examiner repayment of what? Loan. They have paid all the loan because it was 800, now it is what? 0. So write the repayment of what? Repayment of loan. 800. It should be negative. Why? Because we are paying. And then second, don't forget that we subtract some penalty. Some 40.
Go over the loan first.
Loan, we have paid loan. Open balance was 800, closing balance is that. That means they pay all. Find the difference. If the loan figure decreases, it is what? Outflow, because you are making a payment to reduce the loan. And here you are. The loan has reduced up to 0. Meaning that we paid everything. Agree. And if you are paying loan, will money leave or money will come in? It will not come in. You pay, it not come in. If you pay, you get money. When you pay loan, you don't get money. Exactly. So therefore, it will be outflow. Agree.
Okay, so where you rather borrow more loan?
Where you take additional loan, call it issue of what? Additional loan. So in that case, write the additional loan. Find the difference. So that one will be positive. More loan. If you go and take a loan, would you receive money? That money aspect becomes what? Positive. Forget about loan is main liability. When you go for additional loan, it's what? Positive. When you pay loan, it is negative. Agree. Powerful. The penalty. Remember the penalty? The penalty of 40. You must rather subtract here because this is a rightful position. Do you remember? Good. Then that means left the last work is dividend paid. Confirm whether there is dividend in the question. Dividend paid. That's the workings number 4. Let me go and do it for you. So I'm going to walk you through. Even if the examiner was silent, you must do this computation. Simple as that. If the examiner was silent about dividend, do this because some of the examiners are very tricky. They do not tell you that the company paid dividends. So workings number 4, let's go. Workings 4. Workings number 4. Dividend paid. Now, if you're looking for anything paid, what do we talk about? So anything paid, open balance of that item, add that item to it, less closing balance, we are done. That's all. So dividend paid is equal to, pick the retained earnings balance, pick the retained earnings balance, pick the open balance, balance brought down so much, add your antipart to it, profit after tax to it, less what? Balance what? Carry down. That's all. We are done with the game. Whichever answer you get is the dividend paid. That's all.
The opening balance, anything added, and then you get the closing balance.
Yes, yes.
Anything added paid.
Yes, anything paid on this set.
Interest paid.
Interest paid, tax paid, in fact, dividend paid, the same computation. Okay, so let's go to the question to pick the balances. In fact, we have used this question to solve 2 questions. Haruna has been solved already. Retain earnings. Open balance is what? 2620. What's the closing balance? 2880, right? So let's go ahead and put them in. Let's go. 2620, right? 2620, 2880, right? We are lesson this. What is the profit after tax? Let's go. Profit after tax. If you check the video, I think I used a different method, right? That's how we still be the same. I decided to change my handwriting small. What's the profit after tax? Antipart. Why are you sure yourself? Antipart. Which one should I pick? 750, right? Right to 750 or 400?
Profit after tax.
It's the same as profit for the year. 320, eh?
That's the okay, so 560.
Yes, 560. The current year, not the previous year. I was right.
It's not using a profit after tax.
Because in the retained earnings, change in equity, it's the profit after tax that we send to change in equity.
It's a profit
After tax that we send to what changes in equity. That's what we're using now. Now it's like this. Can you ever tie goat? I said I'm going to untie it at Mercy before. What about you tie the goat? That's the same place you must what untie the same goat. Agreed. How we get it? So what they have done, that's what you must do to reverse. What they have not done, you cannot do. So here the examiner indirectly testing us the right way. They've done it right. But let us reverse it. Good. So 560. Antipart is 560. What do you get? So this dividend paid. Dividend paid. What do you get? Friends online. So 2620, 562, and 880. 300, right? That's the alternative. Still working for dividend paid alternative. Alternative. Third examiner retain earnings. Do this. Go to changes in equity, retain earnings column. Right? Open balance. Balance brought down. So much. Alternative present. Don't do the two. Alternative. Open balance is what? 2620. Add your antipart to it, 560, right? Leave enough space for dividend. Dividend is a balancing figure here. It's what? Balancing figure. So leave a space. Add all. If it's not equal to the balance carried out, the difference represents your dividend. Simple as this. Everything. You can even have your own method. We will agree. You can even come out with your own method. We will agree. Where somebody sat down and drew 2 circles and add his name to it, and he said we should call it Venn diagram. You can also bring something to us. Now, find the difference. Add these two together and let's do it. You come back to the same formula that we had. At the end of the day, you must, by here, it must be negative. What? You have to subtract 300. That becomes the dividend paid. The same as this. Agreed. Can I do another method again for you? Oh, let's try. They say working for again. Dividend paid. Now let's go. Start from the closing balance. This balance carry down. 2880, right? Reverse everything you've done. Reverse what? Everything. Reverse everything. So profit after tax, they have added, right? 560, reverse it. What's the open balance? Balance brought down, they've added, right? Reverse it, 2620. Reverse this. What's the answer do you get? 300. That's what? Dividend. Agreed. So you can even come out with your own. Another method. It's okay. No, this one is okay. So dividend is 300. Let's go put it in. Dividend paid 300. You less it. And that is all. Write down this question. Sum them up. What do you get? And let me do the latter part of it, and the rest is story. So let's name it net cash flows from where? FA. So what do you get? Let's write it here. It should be here, it should be here, it should be here. Come again. 860. Negative or positive? Positive, right? Okay. Now, we are going to do something, we call it heartbeat. There is something that, in fact, you must score it correct, even if everything is wrong in your computation. That's why I don't score it wrong. Let's do it. And I want everybody to check how I'm going to do it. It's very tricky, very slippery. So let's go. Underline this. Have you seen? Underline this one. We're supposed to add the three answers together. Net cash flow from where? Operating, and then investing, and what? And financing together. And then we get this answer. Don't write it. Don't do that. What if there's an error? The calculator was not your own. So give you some small error. It will affect you, but this figure should be correct. You got that answer, net cash flow from where? Operating activity. Net what? Cash flows from, in fact, for the year, not cash flow for the year, not operating activity. For the what? Year. Leave it empty. Me, I will put X there. Don't worry. How we get it? We're supposed to add a 3, but there's a comprehensive insurance. There's something that we can do to score it correct, even if there's a mistake among that 3. You must still get this guy correct. Even in exams, we advise that you should do this one first because it's secured. Tell the examiner cash and cash equivalent. Equivalent brought down. Let's call it Y. We will compute it. You add the 2 together. The answer is Z. It's the same as cash and cash equivalent carry what? Down. All these figures can be computed without the help of what? The 3 totals. So I'm going to show you how to compute what? The cash and cash equivalent, the Y and Z first. That'll be workings number 5. So let's go to workings 5. So workings number 5, I'm going to walk you through how to compute cash and cash equivalent. What is cash and cash equivalent? What is cash? First of all, what is cash? What is cash? With reference to IAS 7, define cash. This is what we asked, and they were telling us.
Cash at bank and cash.
Yes, cash at bank and cash in hand. They were telling us cash is a form of currency made up of coins and banknotes that are used as a medium of what? Exchange. Hey. I understand. No, I understand very well. The pressure is not easy. I said pressure.
Use something to write something.
Right for them.
Come on, somebody wrote down. First page, you cancel like this. Where? You go to the next page. Start the time. I don't know what he has canceled right now was the correct one. So he came here with capital letters. Please. The cancel one is not cancel. Confirmed. Not cancel. But if you use pen to cancel it, The cancel one is not what? Cancel. Confirm, not cancel. Examination pressure is the worst pressure ever. Examination pressure. If I tell you that my first part was like, do I sweat there? When I went with the tie. And that was the first part. I was an odd person. I said, where from all this gentility? When we tie, the first people, do I sweat the financial accounting? So I see. I see. So cash and cash equivalent, how do you compute that? It's like this. We have at the start and at the end, right? What is the current year? 2010 and 2009. So this one become what? Brought down and what? They carry down. When you say cash and cash equivalent, it's made up of what? One, first item, cash balance. Bank balance. Short-term deposit. Let them tell you. Short-term deposit. Short-term deposit. Short-term deposit. Less what? Bank overdraft. That's all. We are done. Less overdraft. So just look for this in the question. Sum them up. Cash, bank, short-term deposits, less bank overdraft, or short-term investment. Is that deposit or what? Investment, which are ready available. So let me go to this question. Let me go back to the question. I believe from now, every cash flow question will be so easy for you, right? If you don't solve any question, you meet a question, it will sound as if like you've not even heard about cash flow before. It was your first time. Yes. Let's go through more questions. Eradicate that thing. What am I looking for? Cash. Let's go. Cash balance. Where is the cash balance? You don't have cash, have you seen? Among the current asset, there's no cash. So if there's no cash, what do? I'm going to put dash and dash. There's no cash in this question. The mere fact that this question does not have a cash does not mean that your exam question will not be cash inside. Agreed. Okay. I like create awareness. I don't solve question as it is. I solve it comprehensive, but when I finish, at least I've solved like about 3 different scenarios. Or all the possible scenarios I've given to you already. So just a matter of you getting them. If I should solve this question within 30 minutes, I'm supposed to finish and then another condition. Now I've used more than 2 hours to solve this just one question. Okay, so let's go. Let's go to bank balance. Here, to avoid confusion, start one after the other, okay? Let's start from 2009. You have positive figure, bank balance 2009. It's 100, right? Bank, this 100. So let's go and put it in. Where are you? 100 here, right? Don't forget the reporting currency, 3 zeros. But here it was dash. Agreed. In this case, you don't have short-term deposit, so dash. Then why do I bring it in? Exam, don't bring it in, okay? If it's not there. I like creating awareness. You must be aware. I don't need to solve just this question. If you go, this question will never come. But your cash flow question that will come. Because I gave you comprehensive scenario, all the scenario inside, you solve it straightforward. Let's go. Do you have overdraft in this question? Bank overdraft. Yeah, there's overdraft. Overdraft of what? 420. At what side? 2010. So go and put it there. That's all. So put it here. 420, right? I'm done. Wow. So if I should just solve this question, I'm supposed not to even do this. Only 100 and 420. What for more this computation? It's because I want to create awareness. That here will be 100. Yes, what? Don't forget it's negative. This must also be negative. That's all. So this is what you call cash and cash equivalent.
One negative.
Bank overdraft, is it positive or negative? Overdraft. Okay. So go and put them in. Let's go. Put them in. So now we know why. We know closing balance. We know this. We know this. So let's find them. Now let's go. What was the opening balance? It was positive 100, right? What was the closing balance? Negative 420. 420 negative. First line, tell me, there's a figure here. When I add it to 100, I'll get negative 420. What's that figure? Who can tell me? There is a figure here.
If you add it.
If I add it to 100,
Negative 520.
it should be what?
Negative 520.
Negative 520. That's all. Correct. So that's also, it means that if I add the three net answers, this figure plus this figure and plus this figure, the answer must be 520. If you calculate, it's not like that. That 520 is correct. Simple as that. So add these three figures together. If you're not getting 520, the difference, we look for it. So let's add. You know, this one we call it comprehensive what? Insurance. Let's add up. So I'm adding from where? 1,120 positive minus 2,500 answer. Let's add all the three. So 1,120 plus 2,000, no, minus 2,500, minus 2,500.
1,380.
Okay, let's go. Plus 860.
2,240.
No,
Minus all.
you know, this one is minus, so minus 2,500. Agreed.
1,380.
Now plus 860. Answer negative 520. Exact. Meaning it has balance. In situations where you add, you are not getting this 520, please don't change the answer. This one is correct. Maybe there was a mistake in addition or adding some figures. This one is correct. So we are done with cash flow statements. So this is how you prepare cash flow statements. Everything about cash flow I'm done, but I'm not done. I have to scan through series of questions with you. The footnote, how to treat them, where will it go? Now that we have the base. So for sure she set up the base. This question should be the base. You know why I started the question? Because plenty. Base questions must be plenty. Exam questions will not be plenty. So I'm done. If I have a question, can I ask? I'll take 6 minutes to scan through Harona. And I'll scan through DL. I'll scan through HL. I'll scan through, in fact, the rest will be your own. If I have a question, can I ask? Because I have some question I have to scan through. And that question, even if I don't scan through, I'll give it to you. And watch out the question that will appear in your mock paper or the intervention, the question I will solve in the intervention. Yes, on your cash flow. So if I have a question, can I ask before I scan through my series of questions? In the next 60 minutes before 8:30 comes. Next week, I'm doing, today's Wednesday, right? Next week, we are doing consolidation. Consolidation.
Final account.
Final account, we are using the Sundays to finish the standards before we come and then finalize the final account. Because if I saw more, we're going to meet crazy standard that we've not done. And it will be some way. So at least 2 to 3 Sundays ahead of us, we should be able to wrap up with the standards and now pick final account and solve. And then that is all. So I think it's a very nice idea. Okay. If there are no questions, then let me scan through. First, let me scan through Haruna. When I'm done, I'll give you the bank cash flow as a trial with your solution. Just go and then study the solution. You have to study the solution. Good. Let's go. Let me go to Haruna. Haruna, why are you? Show yourself.
Haruna, open answer.
Oh, yes, I like Haruna because he has everything. But the examiner that said the question there is a very good one. The question is not difficult. It's not so easy. It's not difficult. It's not so easy. So you check. I'm going to read a footnote to you. You see? Check the current liability. You say trade and other payable. We say we want to trade. So they'll give you the other payable. Come and subtract and get what? The trade. That is all. Ordinary dividend payable. This one dividend is you. They have done the changes in equity for you. And that's why I like Haruna. The dividend. Check the current liability. Taxation is there. Dividend is here. Okay. Here, no warranty. They say the following additional information is relevant. I just want to go to the footnote. During the year, Haruna Limited issued both ordinary shares and normal preference shares for what? For cash. So that means all the difference in the shares. Ordinary shares, find the difference. That means coming by what? Cash. Preference shares to is here. The difference also what? Cash. So that's all. So done. This is not new, right? Investment classified as current assets are held for a short term and are readily convertible into what? The stated amount of cash on demand. It tells that investment classified as what? Cash and cash equivalent. That's all. Don't classify as what? As investment activities. So in that case, come here like this. So come and write that investment here, this guy. So come and put them in here. Everything. They will be part of what? Cash and cash equivalent. If you hear that note, but please and please again, if that note is not there, don't bring them here. They must go to an investment activity. How we get a difference? So let them tell you. Because when the examiner is setting the question, you're not there. Everything. So he might tell you the assumption. Powerful. Yes, you find a difference. You go to financing, positive. You are done. Proceed from issue of what? Shares. So write issue of shares. Ordinary, the difference, put it there. Preference, different, put it there. You are done. Now, note number 3. During the year, Haruna Limited sold a plant. I told you always they will sell a plant. With a current amount of what? 840. 4,900. Have you seen? So now they have given the 4, that's the proceed. Current amount is given. But the profit and loss on the disposal have been what? Hidden from us. I told you that every time we give you 2 out of the 3, you must find what? The third, the unknown. Simple as that. That's all. And I told you that all the 3 have a specific place to go. I remember. Yes. All the 3 have a place to go. So for instance, let me see if I have them here. Where is it? Is it here? I'm not sure it's here. It's part of the old one. This one I have not saved it to. If it go. No, we did it. Yes. Here is it. Have you seen it here? Proceed 300, 480, and 180. Agreed. This one. Yes, so let's take note of that. But this note is a comprehensive one. Let's go. Total depreciation charges for the year amounted to what? 1.1 million. Where do you go? Where do you place this one? Total depreciation. 2 places. You can tell me all the 2. Non-cash item in operating activity. What's the last one? 2 places. 2. PP, acquisition of PP as depreciation. Number what? Number 2, right? Number 1, open balance. Number 2, depreciation. Number 3, disposal. Number 4, revaluation. Number 6, credits. Number 7, leasing. Number 8, cash. Number 9. That's all.
And do number 9.
Oh, okay, sorry. Oh, sorry. Sorry. Oh. Now let's go. Plant costing 50,000 was purchased on credit. Where do you go? That's a credit side. So please, here, this amount is included in what? Other payables. So go and subtract it from where? The trade and other payable and send it to PPE. That's all. Oh, only 5 notes. Well, look at this. Oh. Well, look at this. What a good exam now. The same thing will be. This is 2017 what? Can I do some small analysis for you that you don't need to know? Small analysis. That one only few of us have to, in fact, go through that. Cash flow came in November 2011. Question number 2 of Joshua. From there, where dodge? They had it in May 2017, May. Have you seen? And from there, they had it in November. They had it in 2018, November. So guess the next one, the next year that is must come. If I don't answer the question, guess. It's not in May. November, May, right? And May is the first batch, right? And first batch now they say it's April, right? Oh, okay. So therefore, April, what is the next April or next May? May to 2022. I will get it. So this is the evidence that we have. But the actual question will not be released now. I will get it. Good. So all of them. Okay, so let's go. I was explaining something now. Note 4. Trade and other payables include interest of 5,000 as at March 2017 and 2016 10,000, right? What do? You go and take it off so that I can get what the actual or the real trade payable. And then this is interest. Where is an interest? Interest paid. So here if you're calculating your interest paid, this is the open balance and this is the closing balance of the interest paid. And then do that one to calculate the interest paid, open balance and closing balances. That's all. Note 5. Intangible relate to development costs capitalized in accordance with IAS 38 intangible assets. Cost amount to 70,000 were capitalized during the year. That's all. So here, all we have to do is this. They've capitalized the cost 70,000. So go to the balance sheet. Check. Intangible. Have you seen? Let me show you some secret there. Realize that for sure that we saw, it was PPE and what? Investment property. Maharana, it's PPE and what? Intangible. So your own, who can guess your own? PPE and investments. Have you seen that? Two, like this. How we get it? Powerful. So intangible assets. Here, just balance it off. So how do you balance it? Bring the open balance of what? 452. Add the addition 70 to it. If you don't get a closing balance, that means that they've sold some, or they've depreciated some, or they've amortized some. How we get it? So what's the difference? 452 plus 70, you get 522. 522 minus 500, you get 22. So that means they've sold intangible assets costing what? At the amount of what? 22. And we send it to what? The proceeds. You can also treat as what? Amortization. All of them, it will balance. All of them will balance. But I think the marking scheme will use proceeds, something like that. Yes, we use proceeds for it. That's all for this question. I'm done. The rest you will continue. So I need this question solved. I need this question what? Solved immediately with immediate effect. This 17 goes to PPE. It goes to investment activity. The 17,000 goes to investing as outflow. Now your question. Yes. Yeah, the 70,000. Yes, to go to the investment activity. Now I'm done. Let me scan through. I said some questions on the page. Now, if I don't scan through, I'll not be happy. There's some 2 questions. If I don't scan through, I'll not be happy. Let's come here. This question to try and solve some few of them for me, okay? This one is more. Where's the more question? More or mocha? That is question 5 or so. More, why are you? VW. This one is pearl. Is this one pearl? Yeah, this is pearl. No. I have 2 questions for me to scan through them. We are done, okay? The level leases. How does leases affect cash flow? Please, in fact, I've done it wrong, okay? I'm not done solving the question that's we solved. No, there was a B part, right? Who remember that there was a B part? There was a B part. I've not solved that one. Let me go to the B part. That means this question to have it you. It's not material question 12. And I was searching for it. Check the B part. It's a comment on the cash flows, cash flow management of issuer as reviewed by the statement of cash flow and information provided in the financial statement. So just comment. Here, just use the cash flow to provide the analysis. How we get it. Now, here the explanation to the word director is that the A part no after the calculation. Since it's balanced, that means nobody has stole money. If the cash flow failed to balance, that means the finance director, in fact, has cornered the missing money. How we get it? So once the cash flow has balanced, that means nobody has what? Stole money. Simple as that.
What if it will balance, but we didn't balance it? What are we going to do?
In fact, once that's balanced. Now let's answer the B part. We call it the analysis of cash flow. If you want to analyze the cash flow, these are the points. I told you that you have to write 3 points there. Cash flow analysis. So cash flow analysis. 3 points. Number 1, check the net cash flow. Net cash flow from where? OA. It must be positive. It is positive. They are doing well. Simple as that. A, if it is positive, it means they are doing what? Good. That's all. Good performance. If it's negative, in fact, it is bad performance. That they need external bailout. Internally, the money generated is not enough to finance the operation. How do you get it? So any company where the money, the funds that you use to generate, in fact, your internal operations, you buy and sell, It's like, have you seen, let me give an example. You started school, you complete ICA, in fact, you started SS, you're very young. You complete university, you complete ICA, start work, you get married, and mom and dad, parents said, okay, now go and live on your own. But then now, every week you call dad and mom, I need coins. Every time you call dad and mom, you need coins. That means internally you cannot survive. How we get it? That means your operating cash flow is very poor. You need external bailout. But where you have positive, that means good. You don't need any external bailout. Internally, you can survive. Where dad and mom is not around, you can still do some small trading and then, in fact, makes ends meet for yourself without relying on anyone. Agreed. That is net cash flow. So if you do the analysis, that's where you have to start from. So here, since the net cash flow for operating activity is positive, it suggests that there's a good performance in what? Cash flow. Since they don't need what? External bailout or external what? Funds to operate. Let's go to number 2. Check cash flow from where? Investment activity, right? Investing activities. That one, in fact, we have positive and negative. Positive is bad. Negative is good. Wow. Simple as that. Why? Let me explain. Now, if always, let's assume that you have a chicken. Always you're eating the eggs. You get more chickens again. But African proverb go this way. They say the wise person is the one that when it eats egg, you crush your bones, right? It means that the wise person is the one that saves. Simple as that. You don't eat your eggs. Positive simple means you are eating your eggs, you are selling your investment. That is where you are getting more money. So if you sell your investment today, tomorrow, what one are you going to, in fact, live on? Simple as that. If today the company is selling all their PP, you are selling all the PP, tomorrow, what are you going to do to generate money? So it's very bad. Don't be selling all your investments now. Wait, keep some of them. Don't be eating all the eggs. Don't eat all of them now. I don't know what's happening tomorrow. So keep them. So if investment activity is positive, it's super what? Bad. It's positive, super bad, meaning that they are what? Selling off their investment, which rather yield money. They are selling their PP, which should yield money in the future period. What if it's negative? Manage. Okay, so now let's continue. We are safe. Negative means it's good. You are buying more assets, so that's why you are spending money. But you are not spending money, in fact, on any other stuff, but buying what? Assets. And this asset, you're hoping that in future they will yield what? Returns. Simple as that. Now let's go to the next one. That one is 50-50. I told you 3 points, right? So net cash flow from where? Financing activity. That one is 50-50. It's 50-50, A and then B. If it's positive, here it means that you are raising a lot of funds, raising of funds. If it's negative, that means repayment of debt. We are done. So if you check Oforusua, who can explain Oforusua's position to me? Let's go to Oforusua. Oforusua, the operating activity is positive. They are doing well. Obviously, internally, they can generate what they need. That's very powerful. Investing is negative. They're also doing well because they are investing in assets. They are not spending, but they are not liquidating their assets, which is very good. Financing is positive, meaning that they're raising what? More money. You are done. That's all analysis. How many marks? 5 solid marks. You are done. When you go to level 3 and go and meet cash flow and ask you to analyze cash flow, these are the points they want from you. You are done. Last in level 3 question. They told you to really change anything. They wanted to calculate cash flow ratios. They're ready for ratios. There were no ratios. They give them cash flow statement for them to analyze it. So we are done. There are 2 questions I want to, in fact, scan through. But if I try, I'll finish at 9. I'll try. There's a question in the material. Okay, this one is the last question. There's a question. BB. BB, if you do it, you can be happy. Okay, there's a question. Let me, where is the phone? Let me, in fact, let me check here, if I can. I sent some question on the page today. I sent some question on the page today. Let me search for it. The thing is not coming. FR. So that there are two questions that I want you to go through for me. Here is it. Yes, it. Yes, it. Why you? Let's go. I sent something on the page. There was one that have 4 pages. Let me download it and then use that one. I sent some 4 items on the page. I sent 4 items. In fact, the item I sent on the page, now your question is inside, but I don't know where exactly your question will come from. But for those who go through all of them, items are also many. Can also go through all of them. So by all means, your question, you know, see everything right. Is the one that I have cash flows. This one, deal. I've seen it here. Yes, this one. Good. I'm downloading it. This very one. So friends online, let me pin it right now for you to see. So this, the one I've said this, good. All that question need to be solved. The question is that one. One is called Mocha or Mo. I've solved it on the YouTube there. One of them, the solution is on YouTube. I'll share with you. But I'm downloading it's not coming, no. So that means on that note. Okay, now it's in. Okay, so I just want to scan through some few items. Oh, first of all, the class downloaded, but it's missing. Okay, so I think it's in here. Let's go. Let's go. Just 2 minutes to. I put exactly 8:40. Then I'll add additional 2 to it. Have you seen that? Now I'll just at 8:40 and add 2 minutes to it. So to do what? 8:44. Oh, it's not, you know. Okay. Okay, so let's check on the screen. It's in. So let me try and scan through. They're very nice and then old questions. They are in the old ICA question bank. DL. You see DL here? My interest is in the notes. There's a list here. List on plant, list plant. How are you going to deal with the list? That's all, list. When there's a list, that's where my interest is. So can it scan through this with immediate effect? Mo, this one is Mocha. I'll send you the solution of this question. This one is called Mocha. I don't know why. A lot of examiners like it. One examiner in banking, he like it, I drop it. That's the only 2 questions in this, and I'll send you a solution for the Mo. That means you are doing what? The first one, I agree. That's all. I'm down to cash flow.
Is that the one with the list?
Yeah, the one with the list. The difficult one rather. No solution. Teach list. I never even thought about list. I've been saying one-to-one mapping. If I do one, you do one. I've seen that. What happened is I'll do list one of the Sundays. So when after list, I think I'll explain areas that you need where it will affect the final account computation and the cash flow. All the standards, look at final account and what cash flow and then consolidation. So we are done. So on Monday too, there's an emergency I have to run to. So Monday too, I'm starting with consolidation. So what happened is this. I'll pass a very nice video on Monday for Monday's class, like we did last Monday. But I've not checked those who went through. But this one I'll check for those who go through. So Monday we are doing consolidation. And consolidation, I'll send you. I don't have plenty of videos on consolidation, but I'll send you a few one that I have. So consolidation is the next topic. And then we'll do that one. So Monday, it will be full virtual. I'll post, I think 2 videos. You must watch 2 videos on consolidation. And that's all. Then on Wednesday when we meet, no, I'll make the video straight, cover everything, so that on Wednesday I can simply start questions. Because if I don't do that, that means Wednesday I have to start from wherever you get to. Don't worry. I think I'll provide a basic explanation of them. And then Wednesday I'll stop question. But for consolidation, I cannot be able to finish on Wednesday. Consolidation is a very broad one. So I'll take my time for you. And then I'll finish it the following week, Monday and Tuesday. So the following Monday and Tuesday, we should be able to finish your consolidation. So consolidation will take us.
Meaning will come to class.
Hey, sorry. In fact, Monday and Wednesday, forgive me, okay? So consolidation will take us 2 weeks. Then the last week ratio comes in. Ratio, I'll use just 1 week. Monday and Wednesday, we are done with ratio, everything about ratio.
And the
Ethics.
yeah.
The ethics, I call it roundtable discussion. Roundtable discussion means that after everything, I'll just walk you through your question, how to be framed, and then walk you through some case studies. I'll walk you through 3 case studies. Out of the 3 case studies, your own will be similar to one of them, everything similar or equivalent to one of them. And that's what I've been doing. So, and then when you do that, the last week in March is our intervention, which is going for $200 per person. $100 equivalent to what? City equivalent.
And class is no class.
And then that is all. On the 6th March, something may pop up on the 6th March. We are planning. Is it far from here? Is it like 2 weeks? Or it's not 2 weeks, right? It's 2 weeks, right? 6th of March. Oh, it's a holiday.
6 months.
6th of March is on Sunday. 6th March is Sunday. So that means the Monday is what? Holiday, which is 7th of March. There will be some, we still have some days, about 2 weeks, right? Can circulate the news, okay. We'll give you some flyer. Kindly tell your friends that 7th, which is Monday, we are meeting. Can't be possible. Okay, we'll meet from, it's a holiday. So we meet from, okay, 2 things. Either on that Monday, we'll have that program from 2 people are enjoying, they'll not come.
Which program is that?
The-
Is it SRC or?
So, now this one is target professional SRC. This one is like from, let's say 3 p.m. up to 5 p.m., 2 hours online through YouTube. We are just going to walk you through, expose you to the 2022 April ICA exams window. ICA exam. In fact, many things will be said there. We'll try and see if we can get some of the examiners on board, but just that ICA don't allow us to disclose the examiners. I don't know, disclose all of them to you. So that we disclose some of them to you, and then do's and don'ts in the ICA exams. Maybe some of you are first time. Invite all your friends. It's free online. We are just doing that. And that's why I also released this principle officially. I've not released it, rat and rough. That's why I also released it full version. And then which one again we'll do? Okay, we'll do those 2 items. Do's and don'ts for FR, only for FR paper. Financial reporting. Or we should do financial reporting, management accounting. No. Then when we finish that one, then we'll come and then have our main class. Good. So those that will be, it's like we are going to sell the good news. So those that will be baptized in the evening, they join us service. They join us 5:30 to 8:30. Or we should maybe bring it closer because it's holiday. Because it's holiday, we must close very early. So I can get time to go and then have rest. So in that case, in fact, I'll look at the time and communicate to you. So if there's anything, let me know. Good. I'm done. Then any question for me, friends online, suggestion question. I'll share everything with you. Of late, I don't stay long for uploading your videos. Today now you get your video back. for the any questions, suggestion, contribution? I've now started financial reporting. Previously, I was just hanging around. Any questions, suggestion, contribution? Posting comments. Intervention. If you bring someone, there'll be a discount for you. Obviously, if you bring 1, 2, 3, 4, the fourth person will not pay. You yourself will also pay. Obviously, that you bring how many people? 1, 2, 3, 4. Yourself and the fourth person will not pay. How do you get it? That's all. Bring 1, 2, 3, 4. So in 5 in number. So first, 5 people. Obviously, this discount is over. You are only 3 people only paying, right? So try bring your friends on board. Okay, so I think I will have to end here and then continue again, unless you have a question. In fact, someone is asking us is the intervention CD or dollar.
This is dollar. That's what they're asking you.
In fact, it's Ghana dollar. That is cities. It's just 100 cities. But if you pay us in dollars, we accept. We'll never reject it.
Intervention is it for other?
Intervention we are going to hold for I think 5 papers: financial management, financial reporting, management accounting, public sector accounting, taxation principles, corporate reporting, and advanced, and then strategic case study. These are all the interventions we're going to run. Okay, so thank you very much, and kindly go through the videos for us. I'll see you when I see you. Have a nice evening.